4, 3, 2, 1. Watch me. Level up, level up, level up, level up, level up.
Hey guys, welcome to Level Up with Lydia. I am Lydia Nagle, your host, one of the owners of Level Up Consulting with Derek Palmer. And we are here today with Patricia Nagle, who is the Executive Vice President, the First State Bank. And we're really excited to have you here today. So thank you so much for being here, Patricia.
Thank you for having me. Yes.
And so let's just get started. I want to just jump right in with you telling us how you got to be Executive Vice President here and your journey to becoming there, and then we'll get into things.
Okay. Well, this is my 31st year of banking.
Oh, so just brand new.
Yeah, brand new.
Awesome.
No experience at all.
Nice.
No experience at all. I started with a community bank that was acquired by Norwest and then Wells.
Okay.
So the first 17 years of my career was kind of seeing that things change all the time.
Sure.
From a community bank to a bigger bank. And then I went to a regional bank after that. And I've been with First State Bank for 8 years.
Okay.
When I started my career, a lot of it was just data entry and looking at financials and understanding how the numbers met, and then adding that to a loan package and presenting funds for that. Since I've been with First State Bank, I started in Victoria, and I've been in Sugar Land, and we're in a new market. Nobody knows anything about our bank.
Okay.
Nobody knows a lot about me. So we do a lot of business development, a lot of community events to get our name out and our reputation. Our tagline is "We're the friendliest bank anywhere."
Aww.
So sometimes those conversations are not friendly, but we try our best to give them a solution with how to do that. And so my main role now is getting new business, whether that be deposit or loans, and try to structure a transaction that's favorable for our bank and also for the client.
Okay, so talk about some of the, who are the actual people you work with? Maybe a case scenario.
So we work with a lot of individuals that maybe are small business type owners that maybe need a checking account, maybe help with their merchant services, how they process credit cards. They might need a loan for equipment. They might need a loan for a building. And then on the residential side or consumer side, we do financing for your dream home.
Okay.
And also maybe you find some property and you're not quite ready to build. So we do pretty much everything. Loans and deposits are what we do. And we give that down home feeling, and they know their officer. All of our lenders give out their personal cell phone numbers. So you're not dialing into an 800 number. And you're not, getting lost in that mass. And there's ways we can provide solutions that maybe that a big bank may not be able to.
Okay. Have you seen that's the biggest difference between a smaller bank and a big bank is that personalized approach?
For the most part, bigger banks have a lot more services maybe and options, but more technology driven. You may or may not know who your banker is. During my time with Wells, things got transferred to other states and you don't have that local presence. So you always have a phone number and a team of people that are helping get that dream accomplished or that goal accomplished.
Okay, awesome. And when it comes with working with business owners, let's talk about what are some of the biggest challenges you see when you first start talking with a business owner?
The biggest challenge a lot of times is the owners trying to do everything. They don't have a lot of money maybe to pay for a CPA or an attorney or any of those things, and they try to do everything themselves. But those financials are what we look at. And when they're ready to borrow. And so maybe how much you should have in cash for a down payment for something, or how you finance something. If they're kind of doing that on their own, they may take advantage of credit products that are maybe at a higher interest rate, or get into a scenario that they may or may not understand. So it's always great for when they're starting to have that team around them.
Sure.
And that be their attorney and a CPA and a banker. Those are all your trusted advisors. And then as you grow, you want somebody that's going to help you invest. And so that's what we really try to do from the beginning. So you don't make those costly mistakes.
Sure.
And say, hey, we can't do this now, but maybe in 6 months, if you do X, Y, and Z, we could help you out.
Yeah, you actually advise them on how
absolutely.
to get to where they want to be. Versus
and then when they
know.
get in a bind, we become counselors.
Yeah, definitely.
we become counselors. So it's just always better to have that relationship with that banker and the bookkeeper. And so everybody's all on the same page. Hey, I'm thinking about selling this property. What is the tax implication of that? What is the best way
Sure.
to do those things.
And if somebody is looking for, banking services and they don't have the CPA and the attorney already, do you have avenues for them or do they need to go find it themselves? How do they build that team?
We typically have several that we work with. I usually, recommend based on personalities and how they want to communicate. I typically give them 2 or 3.
Okay.
And so they can determine who the best fit for them is, and kind of just have maybe somewhat of an interview
Sure.
with them to make sure it's a good fit.
So why first the First State Bank? Why the First State Bank versus another bank?
So we have, local lenders, local decision making. We're a family-owned business. We have been around since 56. We're actually going to be celebrating our 70th anniversary in May. And so we've been around for a long time. We don't do a lot of crazy stuff. We're very conservative. It's family owned. They value family. They value small business. And so those are people that you'd want in your corner,
Sure.
I would think. And we do a lot of real estate and, just try to support. We don't have a lot of fees on our accounts. So that small business owner that is just getting started, every penny counts.
Yeah.
And so we have ways to save them also.
Yeah. And so do you guys only service people in Texas or?
Yes.
Okay.
Only in Texas.
So let's just say somebody is watching this out of Texas and they're looking for a good banker. What are some key things they should look for in a good banking?
They want someone who's experienced. They want somebody that's been around for a while.
Okay.
They want somebody that they're going to be able to have a good relationship with, someone that they can talk to on the phone or in person or however that's going to be. And they kind of want to know a little bit about the bank also. Is their type of business a good fit for that bank?
Okay.
Sometimes there are, like, we don't do hotels and motels.
Okay.
So if somebody would say, hey, I need financing on a hotel or motel, I would give them a list of somebody that specializes
Gotcha.
in that. And so that's always important, not just the bank, but the banker.
I don't know if I knew that banks
Mhm.
specialize in certain industries.
Right.
Interesting.
So like we do a lot of real estate, we do a lot of residential real estate, commercial, we do a lot of ag financing,
Okay.
cattle and ag real
Makes sense
estate.
for Texas.
So you just kind of want to know. You don't want to be training
Sure.
your banker, and you want somebody that's going to be an expert. So if you're going to them as a resource and that's not something they do, it's going to take longer.
Yeah. So when should business owners engage with you?
I would say, really when they're trying to form an entity, they should also visit with their CPA what type of entity structure is the best one from a tax standpoint and what they're trying to achieve. Get in with us to open that account. And then from that point, kind of see what type of financing needs they might need and go from there.
So earlier the better.
Yes.
Okay.
Yeah. It's great if they have a business plan.
Sure.
They've kind of written something down instead of just kind of seeing how it goes.
Sure.
But, and there are times you have to pivot, just like everything else. But if you have a baseline of what you're trying to do, that's always a good time
Awesome.
to visit.
Okay. Awesome. So you've been doing this a really long time.
Yes.
What is like a horror story of someone coming to you being like, I want to do this. And you're like, wow, I don't know that this is going to happen or can happen. And what could they have done to prevent it as a future business owner watching?
I think a lot of times they use too much leverage, too much financing, and don't have a really good plan on how to pay it back. I have a short-term cash flow problem and I can't get my money in fast enough. Maybe there's a way for you to automate those funds coming in instead of waiting on a check. Maybe they can send those ACH or wire. And so not managing their accounts receivable puts them in a bind and they can't pay their things on time. Or I'm just going to do just a little short-term factoring note and get my money real quick. But, oh, by the way, it's at 20% interest rate.
Sure.
And now I'm trying to figure out how to undo that. So I just think in general, the best thing is to always be transparent. Say, hey, I got myself in a bind.
Yeah.
Or hey, I signed up for this and now I'm finding out it's not what I thought.
Yeah.
And a lot of times that happens because they don't have that relationship. They see something online and, oh, this is quick, fast money, and oh, it's great. And then they find out maybe it's not so great.
Sure. The fine print.
So that would be just my recommendation, just having that relationship or saying, hey, I'm thinking about this. What do you think? And I always will say, have you talked to your CPA? Have you talked to your attorney? So yeah, just being mindful of what's out there because sometimes intentions on other products are not what they appear.
Of course.
Yeah.
And yeah, sometimes the shiny, pretty things get us, and we go, oops, that
Yeah.
might not have been as shiny
Right.
and pretty as we
Right.
thought it was.
Yeah.
So even if they have that team behind them, right? They have the CPA, they have the lawyer, they have the great banking relationship. What are some of the I think financial literacy is a really important thing for business owners to understand, even if they have a strong
Sure.
financial team behind them. So what should they learn? How do they learn? What are the resources they need to be involved in?
They need to just know how their clients pay them is a big deal. What's the best way? How do they get their money in faster so they can manage their cash flow?
Sure.
How do they make sure that how they're doing their business is reported accurately on a financial? You have a lot of clients that use QuickBooks and have no business doing QuickBooks. Things don't balance. So when you're relying on that information and it's not valid, it's hard to say, hey, they can pay me back. I know they have all these things. So making sure, and not just having that CPA looking at the numbers and saying, oh, I wonder why these expenses went up so much. Is there a vendor maybe that I can deal with that's going to be cheaper? Any of those things. So not just having the information, but then using it as a management tool, using it for your team. And the biggest thing I would say, they need to make sure that they are retaining their key employees. There's a lot of competition for employees. And if you have that great salesperson or something, making sure that they're happy and engaged, because if they leave you, that's a big hole you have to fill, and you may not get that same type of person. So I think from that standpoint, they need to have either management or team that's involved in making sure their employees are always engaged.
What do you think one of the best retention for team is?
Well,
Retention.
non-competes are nice. So that's a way to keep them engaged. But I just think in general, having that personal relationship with a person. I've been at a big bank that I stayed for a really long time because I had a great relationship with my manager. And I've been at places where I didn't have that. And it was very easy for me to leave because I didn't feel they were vested in me.
Yeah.
So I think your employees need to know you're vested in them and have a relationship in their personal life.
Yeah.
Work is one thing, but personal life and, their family.
Yeah.
They should always have an opportunity to make sure that those are first.
Yeah. I mean, how hard is it to break up with a friend?
Yeah,
A really
exactly.
good friend. It's very hard to do that.
It's very hard. And so, but yeah, and I have some people that I worked with at Wells for 17 years. I started when I was 20 years old that are still friends.
That's awesome.
And so even though we don't work together, that's to me, and I try to do that in our branch in Sugar Land. We have activities together and interests we have that we do together. So it's not just work.
Yeah. Strong culture.
Yes,
For sure.
definitely.
Awesome. And then any resources that you guys have for business owners to gain financial literacy or
So just in general, we can help them, fill out financials and do all of that. There's a lot of small business resources with a lot of the colleges that help them do business plans.
Okay.
There's no charge for any of those services.
Okay.
And so a lot of times when they're starting a brand new business, we'll say, have you gone to the Small Business Development Center in your area? And I'll say, what is that? So then we say, go over there, do your business plan, get your financials together. They'll actually help them get a package together.
Yeah.
And so a lot of times you don't think about, how much payroll is going to be, how much my facility is going to be, how much in startup money do I need? Those are all things that they help them do.
Yeah.
So, and then maybe they're expanding. You have no idea where a new location is going to cost. And, are you going to have enough staff, and all these things. So they're a great resource.
So a lot more planning than just taking action is obviously key to having successful business, but you got to have a good plan before you can actually do it.
Yes.
And so the small business development centers, they're huge. I think they're a great resource, and they are all free, right? All the education that you get from there is free. Since you work with a lot of business owners, what are some of the, besides financials, what are some of the other mistakes you see or growth points you can see in a business owner?
Sometimes they're really not engaged in the business. Maybe they have other things going on. They're not as vested in the business. Sometimes second and third generation businesses, you'll see maybe, dad started the business or grandfather started the business and the kids want to do things different, which is fine. But maybe they're not as invested. They're not, or a lot of times they're not willing to change.
That's a big one.
that, they don't want to, this is the way we've done it for 20 years, and that may or may not be the best way. So a lot of that, just knowing your market, knowing your employees.
Well, even just starting a business, there
Mhm.
are plenty of business owners who I'm sure you give advice to that still don't want to change
Right,
or take
exactly.
your advice.
Right, right. And then there's times when they're not managing the business well and they need to sell.
Yeah.
So that's not a fun conversation either, or maybe they need to get a third party to manage and do some things. So those are all conversations that we'll
And do you
have.
help them through the sell
We
process at
will
all?
recommend, some brokers and so forth that they can look at that and start evaluating if that's the appropriate thing.
Okay. And
But
then
yes.
as far as like acquisitions, I'm assuming that would be you'd be a part of that if a business is looking to acquire another
Yes.
business. That's
Yes,
a huge
and so
aspect.
we'll look at that also.
Okay. So you guys do all of the
Mhm.
consulting on that.
We will help. Yeah, I'll be a consultant. We always recommend, a business broker,
Sure.
somebody helps with the evaluation and all the data.
Yeah, but from the financial
Yes,
point, you're
yes.
definitely a
Mhm.
key piece
Right.
in that.
Yes.
In that. And would you say most banks do that, or is that kind of
Most of them, for the most part, will. A lot of it will depend on what they're buying.
Sure.
If they're buying a service type business that there's not a lot of hard assets, then that might be something that you get with an SBA loan. And there's not a lot of collateral. We don't do a lot of that. We typically look for hard assets, whether it's equipment or real estate.
Okay.
And so it just kind of depends on what they're buying.
Okay. Awesome.
Mm.
And so if there was one thing that you could suggest to business owners to start doing today, and it might be something you talked about, like learning how to do
Mhm.
finances or
Mhm.
finding your power
Mhm.
team or something completely different.
Right.
But one thing that business owners could do today that a year from now they would look back and go, I am so happy I did that in my business. What would it be?
I think knowing their financials would be the best thing for them to know. Knowing, taking care of their employees, making sure they're vested, doing all of those things, I think would be very important. Just knowing where their numbers come from, why there's a fluctuation, when to potentially start making changes.
Yeah.
Don't view that financial as something that your banker needs. It should be a tool that you're
Yeah.
using to manage your business.
Yeah. I think that's a really important thing is that people either don't look at their financials or they don't know how to look at their
Right.
financials. And then they don't know how to use them as a tool for growth.
Sure.
And so, like we said, financial literacy really
Right.
is super important. Okay. So now I can see Derek and he's like over there wanting to ask questions. So instead of him feeding me questions, we're going to get him in here and he's just going to go ahead and take over. So we're going to do things a little different. Half Lydia, half Derek. So
Awesome.
coming in, Derek.
Yeah.
Take it over.
Okay.
Excuse me. Lydia is the better half, but when it comes to banking and finances,
Okay.
this is kind of my.
Okay.
I'm a nerd. I don't know where I'm supposed to sit. Usually, this is her. This is me telling her to move over. I don't know where my hands go. So one of the questions that I get a lot from my small business clients is, "What's the difference? Like, how do they need to categorize their assets and liabilities?" A lot of people seem to think that liability or assets are assets, but they're actually liabilities. What experience have you had with that? Give me an example of like asset liability problems that you see.
So assets, first of all, on the personal side, assets would be your cash accounts, your retirement accounts, maybe if you're investing in stocks or bonds, your home, maybe some real estate you own, maybe some equipment you own. Those are all the values of what you have that you can shore up either with a bank statement or some type of statement. That's your value. You may have value in your business, which is hard to define because your value of a business and maybe mine might be different. Hopefully it's supported with a financial statement. You know how much assets you have. Liabilities are debts you owe. Personally, credit cards, financing on your building, financing on equipment. And then you have something called equity. So assets minus liabilities are your equity. A lot of times, I'll use the example, I worked with a lot of physicians. They have $300,000 in student loan debt. There's not an asset to offset that value. Their value is producing that over several years. But if they're going to apply for a mortgage, they're already somewhat upside down.
Yeah.
And they haven't bought. So you have to look at that guaranteed income if they have a guaranteed contract, how to make that work. So those are situations you always want positive equity. Think about when you have your car, when you buy it, You might have positive equity, but by the time you trade it in, you may not.
Yeah,
So
it's a depreciating asset.
so you'll look at those, and the same thing with your building. Things depreciate, things go down in value. And then you have your income statement. So income is all of your sources of income coming in minus all your expenses. And then you have something called net income, what you have left. So it's very personal and business are very similar, but that's just an easy way to kind of think of how you evaluate things.
Okay. What about, I'm going to throw some phrases out there.
Okay.
Maybe you can help
Okay.
me. And
Okay.
I'm the dumb guy in the room. That's why I
No.
switched out with Lydia.
No.
But help me understand what's SDE and how does that impact looking at doing valuations and how does that work?
You know, whenever we're financing based on hard assets. A lot
Okay.
of times you have something called goodwill or blue sky.
Uh-huh.
That's value to the person coming in. That's not really a value that you can make sure you have.
It's like betting on potential.
Yes, yes.
Okay.
And so we
Is that similar to like an EBITDA multiplier? You're betting on the
Yes,
potential?
yes,
Okay.
yes. And so when we're financing, we're looking at hard assets. How much is your real estate worth? How much is that equipment worth? So when you go to a traditional bank, they may or may not finance that goodwill or that upswing
Yeah.
because it's not proven. It probably will happen, but you don't know. So a lot of times you may partner with an SBA and get what's called a 7A
Mhm.
to finance some of that, not really collateral value. Or maybe that owner is willing to carry that. So from a tax standpoint, they're not getting all that money going in. So those are things that we look at.
Yeah. Getting previous owner to participate in that and kind of hold part of that note is a common way for these to get funded, I would imagine.
Yes, yes. And from a tax standpoint, it helps the seller. They're not paying tax on that lump sum.
Yeah.
They're having graduated maybe over 10 years or something else. So they're getting out. And then you also don't know how much of that business really is that business owner. I might be able to do something and you come in and you may do better than I, or you don't. You don't
Or I
know.
could drive it into the ground, right?
I mean, you don't know. You know, how many of those people are loyal to that company versus that previous owner?
Well, and I see that a ton, and we talk about this all the time. We have a lot of business owners that think that they own businesses,
Mhm.
but they really are solopreneurs
Right.
that have built, in some cases, a $2 to $3 million company,
Mhm.
but without them being the driving force,
Mhm.
there's nothing really left. They are the company.
Right.
And I would imagine from a financial standpoint,
Mhm.
it's really hard to lend based on that.
Yes, exactly. So that's why we tend to do more focus on the assets, the hard assets of the company, and then find some other alternative for the goodwill.
So you've mentioned real estate, you've mentioned assets as far as tools and equipment and
Mhm.
stuff like that.
Mhm.
Are there any other types of hard assets that we, just as an example?
You know, for the most part, those are the main ones.
Okay.
You have accounts receivable, which are billings coming in and everything else, but there's no guarantee once those are paid off that those are going to continue. So you might have a backlog or contract. Those would be sometimes you're able to lend on them, but if they're not a long-term contract, that's really hard to lend on also.
One of the things I've always liked about your program at the First State Bank
Mhm.
is it is asset-based lending. And there's so many times that Lydia and I will go in with a client and we'll start, listen, we're not CPAs. Neither one of us
Mhm.
claim to be CPAs, but I think we have enough business acumen to kind of get an idea of what, the health of business
Right.
is. And there's so many different types of vehicles to borrow money. You can do lines of credit, you can
Mhm.
do SBA loans, you can do SBA lines of credit.
Mhm.
Then you've got the credit cards and you've got MCA loans, you've got bridge loans. There's
Mhm.
just all of
Mhm.
these different ways of
Right.
doing it. And all of the ones that I've just mentioned are by and large non-collateral based, right? They're just
Mhm.
they're unsecure risk loans. And I think especially the last one, I'm very anti MCA loans. You'll hear
Mhm.
me talk about
Mhm.
that as often
Right.
as I possibly
Right.
can because they're
Mhm.
just dangerous.
Right.
And so I encourage anybody who's starting off on their journey, start with the property first
Mhm.
because the property is going to give you stability in your ability to go
Right.
lend.
Mhm.
And going to the First State Bank and saying, hey, I want to start this business. Here's the building that I want to
Mhm.
buy to be able to
Mhm.
do this.
Mhm.
It's going to make your startup a lot
Right. Oh,
smoother. Is
yes.
that
Oh, absolutely. Yes. Or they might be able to leverage some of their personal assets. Maybe they have their home paid off free and clear. Maybe they have a ranch that they own free and clear. And we could do a line of credit against that to help them. That'll be cheaper money than your unsecured, I call them non-traditional lenders, but
Ooh. Ooh, Lydia, did you feel the fire when she said that?
So that's what I call
That was like saying subprime lending, but
Yeah,
she didn't want to say it like that.
But sometimes that's your only option.
Sure.
But there are better options. And so we always, I had a client today. He's like, I need a line of credit for about 250,000. I'm like, okay. He's like, I have contract receivables and they're slow paying me and they're this and they're that. I'm like, okay. That sounds like that's not the best way to go. Do you have some equipment that you own? Yeah, I paid cash for a bunch of equipment. Okay, let's use that. It'll be a better rate and there's less risk for us. And it's just a win-win. But if that's not an option, sometimes, you don't have any assets or maybe you're a service company and you have no assets. Those are avenues that you probably end up using because there's no other avenue for that.
Yeah. What would you say? So we talked about some of the vernacular, and you brought up ratios a little while ago. You mentioned DTI, debt to income ratio, about 40%. And I think when you mentioned that, you were talking about 40% of available, not even utilized, right? Because you look at, and I'm repeating it like I understand it, but if I'm wrong, please tell me.
Right.
But hey, Derek's got $100,000 available in credit card use. We've got to make sure that we're calculating that as if it was already debt.
Yes.
Because he's got the ability to go utilize that debt at any point.
Yeah. Yes. And we don't want to propose something that could put you in a bind. And so we have to look at what's out there. And so a lot of times you hear when you go apply for a mortgage, now don't go buy furniture, don't go buy a house, don't go do any of these things because they're basing that number based on what they're looking at that point in time. And if you're that tight, if you get a bubble, it could be a problem.
Yeah.
And so not trying to be mean, but, trying to be a good, advocate for you and what's going on in your situation. Or you may say, hey, I have this credit card. I have this amount. It's for my business. It gets paid off every month. So, then you look at the business. Can they continue to do that? So you just want to have that conversation.
What's the loan to value that you guys are looking for on your asset-based lending?
It depends on the collateral. If it's raw land, we're at 65%. If it's construction, we're at 75. If it's accounts receivable, we're around 70. Equipment, we're around 70. But it depends on the age of the equipment. So there's a lot of factors.
So you guys are a very conservative style. You are much more of we are looking for the safe. We don't want to put our clients in a bad situation. And we also don't want to get burned. So I would imagine your attrition rate is very low because it's all collateralized.
Yes, for the most part.
That
And
makes
then you have
sense.
some things that happen in the market. Maybe values go down. Right
Sure.
now, we're not seeing that, but you may have that. So you don't want to be at that cap and not have a lot of wiggle room.
Sure.
Yeah.
Thank you for indulging my financial questions. I
You're
appreciate
fine.
it. I want to talk about one more thing with you if I can, Lydia, and then I'll give the mic back to you.
Okay.
Patricia, you are one of the most active networking and community outreach people I've ever met. It seems like every single event I go to, you're there. And tell me a little bit about what your drive is and what your passion is to give back to the community and what your overarching goal is personally.
So I am involved a lot in this market. We've only been in this market for about 3 years. So a lot of people don't know about the bank. They may know about me now, but it just takes, and I try to be around like-minded people like yourself that, we're here to grow together, to develop together. How can we partner? How can it be a win-win? And that's just how I approach everything with my clients. Hey, I'll be at an event and say, oh, this person's looking for this property. Y'all two need to connect. So it's not selling, it's connecting and building that relationship. I'm real involved with a lot of fitness stuff. I just completed Chevron marathon. We have heart disease and colon cancer in my family. Fitness is probably on my top list of things to do. If there's a 5K or a half or anything, I'm probably in. So I like to do a lot
If
of
there's
that.
not a dinosaur chasing me, my ass isn't running. I'm telling you right now.
So for me, it's just more about that. I have a mom my mom is battling some stuff right now. And so if she would have had a more active life from the beginning, we may or may not be, dealing with some health issues now. But so I like to I love real estate. So anything that's real estate involved, I'm just very interested. When I started in lending, that was just an avenue that I really like. So, but the big thing is just being part of the community, trying to give back, trying to partner. And that's very much in line with the First State Bank. very community oriented, and all the communities we're in family oriented. So everything just kind of aligns.
The advocacy that you have expressed, by the time this probably airs, the event will have already happened, but level your playing field is something that Lydia and I have created to provide access to information and education to small business owners.
Right.
And you have been such an amazing partner.
Thank you.
The First State Bank has been such an amazing partner. You're presenting at the upcoming event, and publicly just thank you for everything
Thank you
you've
so
done for
much.
Level Your Playing Field and what you've done for our movement, the education that you help people see. I mean, even just the understanding of the loan to values really helps small business owners.
Thank you.
So I appreciate
Yeah,
it.
no problem.
Genuinely, thank you for
Thank you
coming
so
to visit.
much.
I appreciate it. And thank you for joining Level Up with Lydia. If you enjoyed this content, please like it, share it, subscribe. Please visit us on Meta, on both LinkedIn, Facebook, and Instagram. And you can find this podcast on Spotify and the Apple platforms, and even on YouTube. Most importantly, we are really looking to get sponsored, and we are looking to have more quality guests, just like Patricia. If you're interested in being a guest host with Lydia, please DM her and we can set something up.
5, 4, 3, 2, 1. Level up, level up, level up, level up, level up.